Good morning, everyone. So it's been a while since we did a video, and then I'm loading this video. It's actually now on the last few weeks before we end the semester. And then for our finals, we're going to have a final project. So by now, you should have submitted all your assignments up to week number 11. And then I owe the last quiz to be corrected, and then I know some of you are trying to catch up on the quizzes. So I am actually seeing your submission, and then I'm going through it, and then I will be checking it over the weekend, right? Um, I'm going to go through the final project, which is an analysis of the financial statements of Federal State of Micronesia Telecommunication Corporation. So we're looking at a telecom company that we need to review and analyze. So we're going to go through certain objectives by doing a common size financial statement, number one. Number two will be to look at a financial ratio, a series of financial ratios. And then number three, we'll take what we learned from the common size financial statements, which I'll explain later. And then number two, the financial ratios, combining everything, and then doing a final write-up. So that will be the objective number three. So for this final project, I know you might have started reading through it, and then I'm doing this video as a reinforcement of where you're at. I want you to think about it this way. Either you could submit objective one or the results of objective one and objective two at the same time, so I can take a look at it, or do it by objective one, common ratios or common size financial statements. Send it to me. I can take a look at it. I'm not going to grade it yet because I want you to do it properly. Then I'll give you feedback. You make the correction. Then you go to objective number two. I'll take a look at it and send it back to you after the feedback. So by the time that you have both objectives one and two combined, and then it's all corrected, then now you can do your final analysis, a write-up, as we say, with regard to the financial statement of the Federal State of Micronesia Telecommunication Corporation. Then you send it to me, and that's your final project. This will be our finals. Now, with that, let me go through some of the calculations so we can actually do it properly, right? This is posted in our announcement page. So in the announcement page, it's there. And then I loaded the instructions, and then I loaded the financial statements of the Federal State of Micronesia Telecommunication Corporation. I know it's a long name. So FSMTC. And then also I did the website, or I gave the link to the website so you can understand better the operation of the company. And then also, here is an Excel file that you can use to document objectives one and then two, or what's needed on objectives one and two. So I'll do this. Let me delete that or close it out. And then the PDF file, so the first important file on that announcement is to go through the instruction of the final project. So um, we are given the task to analyze the financial statements and then making a analysis and interpretation of the data of the FSM Telecommunication Corporation for the years 2022 to 2021. Now, I have not seen the 2023 financials, so we're using 2022 and then 2021. So remember the discussion that we had before on the earlier weeks of this class. When you look at the financial statement, you look at the current one. We'll say it's 2022. But you need to see the trend from last year or the last period or the most recent financials. In our case, it will be 2021. So why? You need to see whether it's improving, the ratios are improving, is it deteriorating, is it showing stability, is there an emerging risk, right? Everything stable, something emerging, is it improving, is it deteriorating? So those are the things that we normally try to take a look at with regard to the performance of the company. And how did we analyze the performance of the company? through using the current the financial statement ratios, and then also by looking at the common size, which will explain how it's actually being done. Okay. Now, the objective number one, let me clean this up. Objective number one is to basically look at a common size financial statement. So common size, so the word common size means that show me the financial statement as a basis or as a percentage of a base amount. So what do I mean? Think about your balance sheet. So what shows on the balance sheet? Assets. And then what is the total of everything? Is the total assets. So remember the accounting equation, assets is equals to liabilities plus equity, right? So you would want to know if my 1 million of cash, what is that percentage compared to the overall asset of the company, right? So what is the percentage of a line item on the financial statement, say the balance sheet, to the overall total? That's why it's common size. So you're using a common reference to compute for the size of an item in the financial statement based as a percentage of the total base. So for example, if it's the balance sheet, what is the percentage of that line item in the balance sheet as to the overall total assets? If it's an income statement, what's the percentage of that line item, say a revenue or an operating expenses, to the overall revenue? So if it's actually a balance sheet, you use the total asset. If it's an income statement, it's a total revenue. Now, the best way to do this for objective one, so we're still on objective one, okay, is to actually go through the financial statement. So I'll pull the financial statement. This file is actually attached on the announcement. Now, what you can see is that we do have, or I typed in for everybody, the financial statements of the company. And then where did we get that? So it's actually the balance sheet and also the income statement. So those are all typed for you. So how did we get that? We actually looked at we obtained the financial statements of FSM Telecommunication Corporation for 2022 and 2021. So it's ending September because it's actually a government entity. So remember, we had one discussion before. If it's a normal company, you have a calendar year. Your operation starts from January 1 and ends December 31, calendar year. If it's a government corporate or if it's a government entity, they normally have endings or year ends in September or by September 30. So we say it's a fiscal year. If it's a Japanese corporation, their ending year is actually March 31. So those are the normal ones that we see. Japanese corporation, March 31. Government, September 30. And everybody else, most likely a calendar year. I do have one client before when I was an auditor. They do have a year ending February 28 and then 29 or February 29 if it's a leap year. If the Olympics happen, then you have a leap year. So those are like the nuances based on the way they were acquired. That was their cutoff date. So it can be a specific year, but definitely it would always be mentioned on the portion in the financial statements. Now, I'll go through a quick on the financial statements so we can explain to you how does it look like. EY is one of the big four corporations or one of the big four auditing firms. The big four is EY, Deloitte, PwC, and KPMG. So if you work for them, then you're working on what they call the big four. At one point in time, it's called the big nine, the big six, then became the big four, right? Because of the merger and consolidation of those companies, the auditing firms. Now, here, I'm going to go through. You do have the report of the auditors, and then basically these are the opinion on the financial statements. So it would say that the financial statements, in their opinion, presents fairly. In their opinion, who's they? Their opinion is actually Ernst and Young's opinion of the financial statements of FSM Telecommunication Corporation. The financial statements, which includes both the balance sheet and the income statement, are basically presented fairly in all material respects, and that is in accordance with the generally accepted accounting principles in the United States of America. And then they audited the company or the entity using GAS, which is the generally accepted auditing standards. So that's why it's like generally accepted G and A, then A and S. Generally accepted auditing standards in the United States. That's why they call it GAS. Okay. And then, of course, they use government auditing standards because it's a government entity. So when you read through it and saying that it's presents fairly, it would mean that it's a clean opinion, meaning that there's no qualification provided by EY to the financial statements of the entity that was audited, which is a good thing. Then it just goes through the certain sections and whatnot. Now, for this final project, it will be best for everybody to read the financial statements. I'll go through it. I'll do Control End. It's up to 40 pages. It's a lot when you think about it. I'll do Control Home and then go page down, page down. The most important part for me on reading the financial statements is the MD&A. Aside from the financial statements itself, which is the balance sheet, the income statement, and the statement of cash flow. If you can please read through the MD&A, it's a short read. It's a good way to understand the operation of FSM Telecommunication. It's from pages 4 all the way to page number 12. So I'm going to go through it really quick, okay? So it's going to tell you what's the composition, who is FSM Telecommunication, and then what do they do? What's the breakdown of their revenue sources? What's the breakdown of their balance sheet? Another term for balance sheet is the statement of net position. So net position, which is assets minus liability, is equals to equity. That's why it's called net position. Then that's actually the balance sheet. So we're going to go through that one as well. At the same time, it would tell you the statement of revenue, expenses, and changes in position. So what does that mean? Statement of revenue and expenses, you would see that on the income statement, also known as profit and loss statement. The changes in net position would be net income, which will be close to the retained earnings of the balance sheet. That's why it's called changes in the net position, which is equity, right? What's equity again? It's asset minus liabilities, both shown on the balance sheet. So I know it's a lot of things as it relates to, but accounting is normally different statements, right? So we want to make sure, hopefully, as I repeat it, it will become second nature to everybody, okay? Or you would have that power of recalling those things. Now, it would tell you the financial operations. It would have some analysis actually. So that's why MD&A. So if I say MD&A, it's basically management discussion and analysis. So MD&A. Okay. And then now we're actually on page number 8. Let me just make it a bit. And as we go through, let's go further. It will tell you what's the economic outlook in FSM as where the company operates. And then also it would have some economic indicators. Would be good to see their forecast. You can see here forecast. And then a couple more of the forecast and the final analysis, right? Now, after that one, it will be the financial statement. So this financial statement, I typed it in already, so you don't have to, except for the cash flow. So we would not include the cash flow. And if you want to go further and understand the breakdown of each item, so for example, I would see the current assets, I would see the liabilities, then you go to the section which is called the notes to the financial statements. So the notes to the financial statements, some companies will call it NFS, which of course makes sense. It's actually notes to financial statements. Would tell you, hey, what's the organization all about? Who is FSMTC? What's the base of accounting? What is now the breakdown of nature of cash and cash equivalents? What about investments? What about accounts receivable? I would say other than pages 4 to 12, MD&A, it's also good to go through the footnotes. So the notes of the financial statements. And then so it would show you the breakdown, and each of the numbers here would tie up or reference to the balance sheet or the profit and loss statement. Okay. So it's good to read financial statements if you have not gone through it, and then that's the one that we are focusing on for today or for this final project. So I'll go back now to the Excel file. So the Excel file has been completed for you. So we'll do the objective number 1. What's objective number 1 is to actually go for the common size financial statement. Objective 1. Common size financial statements. Now, the common size financial statements, when you look at it, is basically the one in yellow. So you can see yellow here, right? So you would fill it up both on the balance sheet and also on the income statement. So you need to fill it up only for objective 1. Now, I filled out the first line so you can see the calculation. Of course, we're going to break it down. Let's do this. I'll go to the cell and I'll press F2. So the variance between 2022 and 2021 is basically the current year, 2022, the one H8, minus I8, which is the 2021 cash and cash equivalent. So what does it mean now? When you look at it, the explanation is that cash moved from 4.2 million to 5.4 million, or an increase of 1.1 million, representing 27% change from 2022 to 2021. So normally that's the cadence of the way that we write financial statement analysis, right? We mentioned what was the movement, but we have not mentioned like what was the movement about, why did it result to that one. So that will be coming from objective number 3. Now the common size here is actually this one. Common size, as we mentioned a while ago, is representing the line-by-line item. What's the line-by-line? Here are the line-by-line items. The line-by-line items in the balance sheet. So what is for example, we'll do inventory. Inventory is 1.3 million as of September 30, 2022. What is the percentage of inventory to the total assets of the company? So what will happen is that I'll skip some, okay? I will do it this here, equals, and then this one divided by total assets. So it's actually going to be properly formatted 3%. I would need to do the same for 2021. So 3%, not much movement. Actually, you would see that there are movements. Yeah, there you go. When you actually break it down to more than one decimal place, there are movements, but normally we round it up, right? So almost the same. You would do that for everything. Now, somebody would say, sir, what about if it's a liability? If it's a liability, it's the same. Let's take a look at it, accounts payable. What is the percentage of accounts payable over the total liability and equity? Why? Because it's the same amount, right? Let me highlight that. your total asset, which is this one. Why do I know it's total asset? Reason why, this one is showing all the assets. That's why this one is the total assets. That total asset is technically the same of 39 million, is the same as your liability and equity. See, it's the same, right? Similarly, it's the same here. So it always be the same. That's the rule, right? So I can do it this way. If you want, you can actually do it that way, but like technically, it will be good associated with liabilities and net pension or net position short for equity. I move it up or I move it to the right side. It's now on the year prior. Then you would have that. But don't forget, also complete the variance. Now, once you have that, no explanation yet, but we want to make sure that you compute for the common size. That's why I'm thinking the common size and the ratio you could submit at one time because it's a bit relatively easy, right? But the ratios, we just want to make sure you're properly doing it. Let me just make sure changing here, ratios, which I'm going to show you later on. So I have a picture of a keyboard, so it's easier for you. Now, variance, same thing. This one is a decrease, right? It's a negative amount. Why? Your revenue relating to mobile charges is actually 7.9 million in 2021. But in 2022, it's only 7.2 million. So you can tell that I am actually rounding it off, right? In storytelling for financial statements, if you, for example, you are the CEO of the company and I am your accountant. If I tell you, Mr. or Miss CFO or CEO, revenue on mobile charges for 2021 September is 7,888,714. By the time that we talk about it, way too many numbers I would have forgotten or mixed it up with everything else, right? So that's why the best way to talk about a number is by rounding it. You just say 7.8 or in this case 7.9, right? I'm rounding, then 7.2. So that would make a change. If it's a larger corporation, say United Airlines, I would not even do a 7.9 or a 7.2. I would just say 8 million and then 7 million. You just drop. You should basically pull rounded, right? Rounded numbers. Because you might even do it by the billions, right? Okay, so just want to make sure that the storytelling is actually important as we learn and as we wrap up also the semester, right? Now, I'll do one here. So you're going to fill it up. But don't forget, when you go to the expenses, it's the same thing. I need to see what's the percentage of corporate operations as it relates to the total operating revenue. So your operating revenue, this one will be your base. Okay. In the balance sheet, the base is either the total asset or liabilities and equity, but our base for the income statement is the net operating revenue. Okay. Or sometimes they can use gross or non gross revenue or net revenue, but as long as it's revenue, okay? Because it's the basis of everything. So what does it how does it say, what does it say? So now the way that you would tell it, corporate operations, okay, let me just do this one so you can see the year. In 2022, corporate operations represents about 19% of total income. Corporate operations for the year ended September 30, 2022 amounted to $3 million, which represents 19% of the total operating revenue. That's actually how you tell your analysis. So that's an important way of framing your financial statement. That's the way that you would say. And then also, let's do it this way. I'm going to copy this because it's easy to copy and paste it, right? I'll just make sure it ties up. There you go. So you can now also say that, um, and then I have a fire truck, if you can hear it. So corporate operations increased by 155,000 in 2022 from 2.9 million in 2021 to 3.1 million in year ended September 30, 2022. This increase represents a 5% change in corporate operations. So the way that we frame it is actually easy to be understood of what were the changes or the delta. So how did we get the 5%? Want to make sure that we understand what's 5%. Remember, there's a change here, which is actually the difference between a 3.1 and the 2.9. The difference of that one is 154. So 154 divided by the prior year. Okay, so the prior year will make it easy to show the percentage change. Now, if you do it this way, 1.9 multiplied by 100% plus the change, it would actually be that amount. That's why you can say that that's the change. Another way to calculate the change, if you don't want to use the one that I showed you, it will be current year divided by prior year minus 1. And then if I express that, that's also 5%. And then I'm going to show you. So it's the same thing. Okay. So giving you a couple of options. It's normally easy to follow through using this, but some working papers by investment banks does it wherein it's current year amount divided by prior year amount minus 1. Our formula right now, similar to the balance sheet, is current year minus prior year difference, which is the 154, right? 154 divided by prior year, you would arrive at the same amount. So want to make sure you actually understand reasoning behind. So then we clean it up, making it a rounded amount, and that's a 5%. Okay. So far, very easy. I bet you can do it even before watching this video, but I want to make sure that you actually understand the logic behind it. Now, I'm going to go to our instruction, and then we have completed objective 1. And then we were asked you to present your findings using the Excel file. Okay. Now, we will be asking, or I will be asking you to provide a calculation of 3 ratios. So the ratios are liquidity ratio. The next one, profitability ratio. So mostly income statement as it integrates with the balance sheet. Here are mostly balance sheet. And then efficiency ratio. Asset turnover, receivable turnover. I will then ask, so here's where critical thinking will be applied. If you can, number 4, if you can show me 3 additional ratio that you've learned, go back to our recordings, go back to the book, go back to our textbook to look at other ratios that you can use. 3, I'm asking, of anything that you think is important for FSMTC, FSM Telecommunication Corporation. So I would give you a free rein, which one you would want to select. That's how I will be evaluating what you have learned on the class. But you would need to do you would need now to create that formula in the Excel file. So that Excel file, I'm going to go back there, that we've done, I put here ratios. The file that you have might not have it, but let me focus on this one. For example, here's what we're asking, right? 1, 2, and then 3. So I'm going to highlight this for now. So you would need to type it in here and then say that, okay, let me do current asset, then current liabilities. I basically copied it. Then let me now type it in, current assets. Let me delete it so you would know how to do it. Current assets, I will do equals. Then I'll press Control, page up, and I would say current asset. There you go. I can see it. Is this amount? Enter. Equals. Control, page up. Current liabilities will be here on this side. Then press Enter. I will do the same. So let me delete this one, okay? If I don't have the space, I can copy it and I can paste it. And then this one is just dividing it. Then I have the formula. Now I need to check whether it's properly calculated. If I want to go back to the source, I can do, here's what we're showing here, control and then the open bracket. So control and the open bracket. If I do that control then in the bracket, it goes to the source, which is 10.4 million. If I want to go back to where I started, press F5 like this, and then press OK, enter. So pressing F5 goes to the original cell, but you need to press the control bracket. So that's why I have it there to show you. So hopefully you've seen that and then you learned a trick, right? The one to go back and forth. I would say do also control page up and control up. Control plus page up and then control page down. So these are good navigate. If I do control page up, it's going to go to the left side of all the tabs. Page up, then control home, then control page down, next tab, control home, it goes to the very beginning. Control end goes to the very ending. Control page up goes to the left side. Control home, I'm home already. Control end, END, right? It's actually there. And then I'm going to go to the ratios. Where's control? Control, page up. I should have page up here. Ooh, am I? Page up, page down. Yeah. Control home, control end. So depending on the keyboard that you have, right? But that's one. My keyword is almost the same. Okay. Now, so we're done with this one, and then now you need to write up the financial statement. So let me give you or the analysis, which is objective number 3. Here's objective number 3. Summarize the key findings, make the recommendation, and then do a write-up. Now, submit first to me once you completed objectives 1 and then 2, if you can do that. If not, then do objective 1, send it to me. I'll take a look at it, then I'll send it back to you. I'll show you an exercise that was made for United Airlines. It's not our project, but it's something that I did before back in the days when I was doing a finance class with at the UC Berkeley. They have an extension program, so I was enrolled in that one, and then I'll show you how it's gonna look like, right? I'll attach this example in our announcement page so you have a reference, or I will also include it in our a video for this week. Now, I hid some items, so if you do unhide, there's a lot of calculations. You can, if you want to look at it, can be a lot of noise also. But I wanted you to focus on the ones presented right now. I'm not asking you to redo the same way. Do it simplistically. But at the same time, I want to show you how can it look like if you extend the work, right? So in the project that I did with my professors, that they were asking about operations. So we're using the Porter's 5 forces, and I chose financial statements for United. Then I would create a file wherein it actually brings to the tabs and whatnot. I made some links and whatnot. So the ratios looks like this. I would type in the ratio, I would calculate it. There's the formula. And then it's actually being asked for 4 years and have the explanation. It's a bit wordy and whatnot, but that's actually what we submitted. But the final submission is actually a write-up. So kindly hold, guys, okay? I'm opening the write-up. I'm not asking you to do the same. It's back in 2013. So that's why I was doing year 2010 to 2013. It's a lot of things to do, but it's the company background, the order, and then here's the financial statement analysis, the results of the financial statement analysis. So I would actually have them done. It was explained, and then we did some ratio. It's a final project also as well. I'm not asking you to do it that too much of a word, but at the same time, I would want to show you how it can be done based on the analysis. So what level of analysis that you would want to do or you can do depends on how much you have read the financial statements of FSMTC. I'll send the same thing to you as a reference, and then including the Excel file, I'll send it to you also as a reference. But for now, objectives 1 and 2, complete the template in Excel. Objective number 3 is the write-up. You can use the Word document or you can actually type it here as well. Okay. So I would reach out to everyone every now and then. I'll update all your assignments and then for your grade also. And if you have a question on the financial statement analysis, please do let me know. Reach out to me and I will help you out. And hopefully, we are now doing the application of what we have learned for the past few weeks that we have. Okay, thank you, everyone. Have a good weekend.